Hi, welcome back. My name is Steven, and we're reviewing today's New York session trades. It is July 29th, and we took two losers today. I would say that my process was probably a little bit lackluster. Hindsight's 2020, but I completely read the market wrong, and I don't think I utilized all the tools necessary for me to make the best possible decisions today. So back to the drawing board for our evening session or tomorrow's session to see if we can find a way to make better decisions moving forward. So the first trade we made today was up in this range over here. We entered it around 64, I want to say 64.32-ish, and we saw these two bullish candles. We saw some aggressive buying on Bookmap. I'm going to pull Bookmap so you can actually see it on the screen here. So let me see if I can get my cursor up there. So if I kind of roll this back a little bit, at around 10 a.m., we had some aggressive buyers step in, and I jumped in after we tested this support zone highlighted in all this orange down here. And what happened is we pretty much just didn't go anywhere. So we ended up actually coming all the way down to 602 and 601 at around 11:40 Eastern time. And we got stopped out at 6:418. Now at 6:418, that was around 10 a.m. Eastern. We got out of that trade, hit our stop. We moved it down a little bit, and you can see our risk reward ratio isn't very good here. We moved it down because we realized that there was a gap, and the gap was at about 620, and I noticed that on full report. So I missed that in my analysis, and I think if I would have known that there was a gap and we were going to possibly fill it, which happened over 80% of the time. Let me see if I can bring up Edgeful here and see what we can see on the Edgeful side. So here's our reports. I'm going to come all the way up to the top, and we're going to see gap fill 100%. It did fill, and if we look here, 78% of the time the gap does fill in the scenario that we had today. So I kind of missed this report, and so the what's in play is extremely important to run through. It has some other stats like open range break, retracement, but I should have ran through all of these different reports. Open candle continuation, slightly started red, and it did close red. And we could see that we exceeded the average daily range today, which happens about 28% of the time. So we definitely had some bearish today, and our max red streak today is 7, generally speaking, or 6.27, and today it was 7. So 2-to-1 red candles dominated. Power hour breakout, new low of the day. So pretty much bearish the entire time. And that was essentially an error on my part. So essentially I jumped in. Let me come back to Bookmap and TradingView. I jumped in because I saw this aggressive buying. And then I decided to jump in again. Looking at TradingView, once we came all the way down to the bottom, I saw this range that we haven't tested again, and I decided to enter one more time once we broke below this VWAP. So probably another mistake, because when you're below the VWAP, you have to be guilty until proven innocent. And this was a long-term VWAP, this red one that we hadn't visited anyway. And you can see price was respecting it, moving up. And today we actually broke through it and below it. So pretty bad trading on my part. I think that a lot of this loss today, we're down 142.50 on the day, could have been avoided if I just would have been a little more patient, read the market a little bit better, maybe just waited to see if that gap would have filled, or played the gap fill and actually took a bearish bias as opposed to a bullish bias for the day. So my bias was completely skewed for the day. Um, we started the day out and we just continued down all day long. So that's the review for today. We took 2 trades, 2 longs. We're wrong on both of them. The second one I should have never entered. But I felt like we had a good chance of rejecting from this previous low. We actually broke it, which stopped me out and continued to range in this small range that we created at the end of the day. So clearly lower lows and lower highs throughout the day. Tomorrow is an FOMC day, so it's going to be probably a pretty volatile day. And we're going to have to take a look at news and factor in some more things in tomorrow's analysis. Thanks for tuning in. And until next time, happy trading.